We'll be hearing from Fed Chair Jay Powell tomorrow afternoon after the Fed's policy meeting wraps up. But our next guest says that he doesn't believe that the Fed will start its taper program anytime soon. Joining us right now is Mark Grant. He's Chief Global Market Strategist at B. Riley Securities. And Mark, maybe before we look forward, we need to take a look back at what happened yesterday and what you think the implications are. Do you think yesterday was about China primarily, or is this just the final straw after so many things have been building up so many concerns?
Well, it was certainly, and good morning, Becky, it was certainly Chinese-centric. The Evergrande situation is much more serious, I think, than a lot of people realize. They have about $300 billion in total debt. And, in China, you have to recognize this. They don't have a rule of law. They don't have due process. And whatever decisions are going to be made about Evergrande are going to be made by the Chinese Communist Party. They can certainly run the country however they want to run the country, but in terms of investors, as you probably know in my commentary out of the box back in July, I said, get out of China, stay out of China. It's a losing proposition. You don't know what these people are going to do. And there's no rule of law. There's no creditors committee that are going to decide anything in some court. The whole decision and what's going to happen here is made by the Chinese Communist Party. And I think it's going to have global implications. And we saw what happened yesterday. We're getting a little pop in the futures this morning. But I am very cautious about what's going on here.
I understand your concerns about investing in China, but do you think that there's a contagion factor, that it spreads beyond? And I mean, yesterday you saw everything declining. Every one of the S&P 500 sectors was down, some of them more sharply than other. Energy, commodities, a lot of those places down, including cryptocurrencies, which really took it on the chin. That's what I mean. Is that worthy of blaming that on this China situation, or do you think there's other things afoot here?
I think the China situation, Becky, is the main culprit. Look, there are banks that have lent money to this country, American banks. There are a number of our big money managers that own both the equity and the debt of this company. The debt over the last 6 months has declined from around 90 cents on the dollar to now around 25 cents on the dollar. And it's big enough to have an implication. Sure, you can throw in what the Fed's going to do. I don't think, as you stated earlier, they're going to taper at this point for a variety of reasons. The China situation is one thing with Evergrande. Another reason is we have the debt ceiling coming up, and there's a lot of political dissension about how to deal with that issue in the United States.
You don't believe the pause in the China pressure at this point. Do you believe the U.S. equity futures this morning with the Dow indicated up over 300 points?
I think it's a pop. I think people are being overly optimistic and thinking that things are going to get better. I think the big day, just so everybody knows, is Friday. The first big Evergrande loan is due on Thursday. We're going to all have to sit here and wait and see what the Chinese government does. I don't think anybody has any idea. So in my institutional and individual accounts that I deal with, I've suggested, and we've been raising some cash for Friday to see what happens after Thursday, and if the government intercedes or if they actually default on their bonds. And then, of course, the rating agencies in the last 24 hours have been warning as well. So I think it's a serious situation, and it's a global situation.
Mark, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.